Hey everyone, welcome to CoveredCall ETF Investing, your central hub for deep CoveredCall ETF data. Today's video, because we haven't done it in a while, we're going to be looking at the month-over-month changes in distribution and yield for Canadian CoveredCall ETFs. As we head into March, what kind of distributions you can expect, the percentage changes month over month, what kinds of yields are we looking at, are there opportunities there for higher yields? Let's get into that right now. So here we are in the September CoveredCall ETF AllStar Tracker. For those who are newer to the channel or may not be as familiar with this, I've created a Google Sheet back in January of this year of a desire to track the health and the history of this industry, merging the best of information you'd find on places like Google Finance and Yahoo Finance, and merge it with the information you would find on a fund manager website, so you'd have an easy way of being able to compile information and filter it incredibly easy. From yield and performance data, distribution data, AUM data, all over the place to help make you all have more informed decisions about the kinds of CoveredCall ETFs that you're going to be investing in for the long term. It's changed so much in the last 8 months, I must say. I have the January tracker here just as a comparison, where you can see it's like one tab. All the data is static in here, simply meaning that as soon as the tracker went out, the information didn't change, and you'd have to wait till the next month for the change to happen. Right? So it was compared to what it is now, it was a pretty basic tracker, but you can see there was basically no tabs on the bottom here. But then I aggressively went and wanted to extract more data, and even back in July, the static data now has been transformed into a live data tracker, meaning the information you see right here, yield, current price, daily, volume, all the way into performance data, all of this is live, and it changes on when the markets are open. Like, these things are changing all the time, right? If it's down, it'll turn red. If there's some issue with a particular cell, it just gets muted and turns into this hyphen. And there are other aspects of the tracker that are alive too. On the Canadian tab, this AUM also changes as well. And there are other tabs in here that will help you kind of more or less easily identify, solid growth patterns in AUM versus the red flags you see with what's been declining. But they all basically have the same sort of construction to them, so that when you go from tab to tab, you know mostly what to expect, right? If you see red, green, hey, you know to look for an easy visual cue. If something's growing month over month in AUM, green, 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 hopefully that is identifying a healthy fund that is just becoming more popular, perhaps. Anyway, so if you want to level up your education in this space, and you want to have this in your arsenal for years and years to come, and be up to date on the latest information on CoveredCall ETFs, then absolutely join the Patreon for access to this. Even just to try it once, it doesn't hurt. It's $13 for 1 month, and I do all kinds of workshops, Q&As, a live chat. I'll do videos over there. There are short tutorial videos that you can find over in the collections tab, an events tab, so you're aware of when events happen, all the different trackers that are there. So videos that are very short and get right to the point with how you can navigate the tracker, and there will definitely be more tutorial videos to come, especially as people bring to me what it is they need help with. So anyway, let's get into why we're here, which is looking at yield and distribution history. So for the yields, let's just look at overall the sizes of the yields. Tesla and Nvidia, I want to say this is probably the first time we've had two Canadian funds that are above 20%. Now, as opposed to the American side of things, you're going to notice the yields are quite different. Right, you got a comparison of the high teens are on the low end of the yield. So what's the difference? Why does Canada have much smaller yields? The Americans just are they use other strategies like synthetic covered call ETFs. Anyway, there's a lot of jargon there, but let's just put it this way, that the strategies are just different, and we'll keep it as simple as that. On the Canadian side of things are a little bit more conservative based. You'll see that most of the funds will have gone to fixed distribution rates, so they pay out pretty much the same every single month. Whereas on the US side of things, it does bounce around quite a bit. So variable, most of them all pay out monthly. There's only one Canadian fund manager that pays out basically every other month, or I should say once a quarter, which is CI Financial. So anyway, moving down the list, we're gonna look at some of the higher yielding covered call ETFs. Which ones do I like in my experience? I've owned ENCL. I will own it again. But just it will be held within my future non-registered account, which is coming up fast here, probably at some point early next year. So ENCL, I've owned it. It's probably the king of the energy covered call ETFs here in Canada at a really skookum 17.42%. Bank is another one that I'm really interested in owning. There are a bunch of financial bank covered call ETFs from what you see here, bank at 16.06%. EBNK definitely got a lot more interesting within the last couple of months. It had a yield of about 10%. And with a giant distribution increase, it moved up just behind bank. But they're both from the same fund manager, especially when something moves that quickly from, say, 10% to 15%. EBNK, it will be interesting to keep an eye on just to see if it can actually maintain that distribution. But QQQY, once again by Evolve at 15%. These are two funds here that have gone through a similar explosion in yield growth, being that they were kind of in the 10% range, and then they basically just exploded up over a 1 month period. So obviously, definitely will be keeping my eye on these two just for the story. I've never seen stable funds jump so quickly and then maintain it, right? Is there something else going on behind the scenes that we should be aware of as investors? Anyway, we'll keep our eye on that. Nothing else to really report. These new distributions haven't been out for an extended period of time. I want to say maybe QQQY a few months, EBNK a couple months with these new distribution rates. Now I was going to touch on also BKCL. It's right behind bank as far as yields for financial covered call ETFs. Keep in mind, bank and BKCL, they have leverage, so naturally they are going to be the higher yielders out there. HMAX, which I've owned, and does not have any kind of leverage to it, is still at a really respectable 14.45%. We also got some unleveraged versions of what we just looked at, like BKCC, and bank actually doesn't have a non-leveraged version, I should say. So anyway, for the top bank covered call ETFs out there, if you're looking at getting exposure to the big 6 Canadian banks, maybe you want some financial service companies and some life insurance companies. Bank does hold that. Same with HMAX as well. Whereas BKCL just focuses on the TDs, the RBCs, the national banks, Scotia banks, and BMOs of the world. Right. So moving down the list. We also got ENCC, which is the non-leveraged version of ENCL, which you can see up here. This is where you can clearly see where non-leverage versus leverage makes a big difference, 17.42% to 13.92%. Okay. And again, I've owned ENCC. I swapped it out for ENCL once, a couple months after ENCL came out. Next up is a utility fund I really like, UMAX, 13.79%. It's basically held that yield for, you know what, I'm just curious. Let's go look at UMAX. So this is the yield tracker tab. You know, I'm just curious, what has the yields? They've basically kind of hovered around the same amount, a really steady sector, and it's all Canadian. It's got a really amazing mix of different industries under that utility umbrella, which we'll get into in just a moment here. But as you can see, it's like 13.75. It basically just has settled into a really nice range. Yeah, it got hit in May. Probably it's July was at its highest yield, and then it kind of reverted back to the mean, which we kind of saw earlier this year. Okay, so basically what that's indicating is its performance is starting to improve. UMAX doesn't really grow. It hasn't really. I can't say it's really grown its distribution on a stable level. It's kind of just hovered around the exact same. Sometimes it declines ever so slightly. It's basically shaving a little bit off the top. Sometimes it grows by just, you know, the width of a hair. Does it grow in it? Again, it kind of holds around this narrow band of an average. But it's got things like traditional utility companies like Emera and Fortis, to railroad companies like CN and the Kansas City Pacific Railway. And then it also holds pipelines like Pembina and TC Energy. And then, of course, telecommunications as well. So you get a really awesome mix of different sectors within UMAX. And at 13.79%, you know what, let's just look at some of its performance just because I just want to. Yeah, so it's, you know, over the past month, it's up 1%. Over the past 3 months, up 2%. So again, you're not going to get explosive growth from UMAX. It's just a steady eddy just for income. But yeah, as we move down the list, we also start to get into more of the all-in-one, so ETFs that invest in other ETFs like HYLD at 12.51%, and then it's kind of followed up by HDIV, another Hamilton fund. One focuses on the US, one focuses more on Canada. EQCL, oh, by the way, HYLD, HDIV, these are funds I own. EQCL, same thing, I own this. EQCL, it's more of a globally diversified CoveredCall ETF fund, mainly focusing on indexes like the S&P 500, the NASDAQ 100, the developed markets index, the emerging markets index. And it also has the TSX 60 in it as well to cover some Canadian stuff. And yeah, as we continue to move down the list here, you know, we start to get into a range of where I would say is my personal cutoff, which is 10% plus. That's what I cover on the channel. That's what I ideally like to invest in. There is one exception to this. BMAX, I've held for a long time, has been a powerhouse. It's almost like the unsung hero of the portfolio, mainly because I didn't expect it to do as well as it has done for me personally. And it's raised its distributions a couple times, which has pushed my yield much higher than I want to say maybe 10.5%, maybe closer to I'll just say for the conservative speculation, probably about 10.5% is my yield. But every so often it dips below, and then they raise the distribution, ends up getting getting a little bit of a bump. But even if it's below 10%, BMAX I'm still investing in. This is a great buoy in the portfolio, and when we're in the bull market, it participates all the way. So, and then when the market seems to be stumbling a bit, it almost acts as a brake. Like, think of like a roller coaster at the top of the hill. And you're about to go down. It kind of like acts as a brake. So I like to say BMAX is the buoy in the portfolio. But now we kind of, again, get into other funds that won't necessarily get covered simply because of, I like to, again, personal investing strategy, 10% plus. There is a fund in here that I've talked about in the past. I've been waiting for this thing to get to about 10%. Even if it does, I don't know if I'd even invest in it anymore, but base, it's probably at the highest yield this year. Hasn't gotten over 10%, and when it's gotten close, its performance has picked up, and but now it's just stumbling a little bit. So yeah, getting closer to that 10% mark. Hopefully base can make it. But anyway, that's, I would say, it for the more significant yields out there that you might be interested in covering. Let's go look at month over month distributions and see what has changed month over month. So pretty quiet month as far as distribution increases. H-bond up 1.92%. RMAX up ever so slightly at 0.74%, and then we got FMAX up 0.31%. Now, even though that most of the funds that we're covering have not changed, I actually really like this. It just goes to show that even though nothing has changed, in my opinion, that's still exciting to see. Right, just once again reinforces that the industry is mature and it is stable. And for predictability and planning purposes, especially if you're living off these funds, that's what we want to see. Right? It's exciting to see when we get a paycheck raise. I understand that, but overall, that's not going to happen. It'll happen from time to time. But what we do want to see is simply just stable distributions month over month. Okay, let's get to what has actually decreased. Now we can see UMAX. I mean, this is no shock for UMAX. And honestly, for all the sector CoveredCall ETFs, even some of the more index-based CoveredCall ETFs by Hamilton, this company has been on an absolute tear this year with distribution growth. So the fact that we see, it's a little bit down is by far a drop in the bucket compared to how well these funds have been able to grow their distributions so far this year. And to give you an example, let's actually go over to the distribution tracker. And you know what we'll do? We will filter. Let's actually just filter by fund manager. We'll clear that out. We'll go down to Hamilton and look at the distribution increases so far this year. So despite what you saw over here on this first tracker, which might come as maybe a bummer, Hamilton is pretty open. They're open about the fact that they have said that, look, our sector CoveredCall ETFs, our the less diversified funds, which would, QMAX and SMAX even fall into that category. They're not all-in-ones. All these companies have roughly about 20 companies within them. They said that, yeah, those ones will probably bounce around like ever so slightly. And so far from what I've seen this year, yeah, they do that. But in the grand scheme of things, from the start of the year, we got HDIV with a commanding 21% growth rate. HYLD grown 18% this year. Those are the two all-in-one funds. I own both of them. And look at this, even QMAX, SMAX up big this year. The only two funds not up, UMAX, as I covered when we were looking at yields. The yields don't change all that much, and neither does the distribution history, right? If you're bummed out by 1.72%, in my mind, everyone, this is still incredibly stable, even if it's down ever so slightly. HMAX, roughly falls into the same category, although, you know, I mean, HMAX, I'm sure for, you know, many would want to see that a little bit higher, but look at what Hamilton has done so far this year with their distributions. They have been doing extremely well with that, and we can see month over month where those changes have taken place. From the start of the year, we see stability, we see a little bit of growth, but for the most part, you saw much of that growth in the first half of this year, and then it kind of started to stabilize, especially as the market kind of softened. But nonetheless, like that first half of the year has really propelled Hamilton with their distribution growth, and I think they will finish the year, I'm sure, strong, barring some sort of major event. All right, so hopefully you enjoyed this just small rundown of the CoveredCall ETF AllStar Tracker. I swear if I covered the whole thing, it would take 3 hours to talk about. This is just a small example. If you are interested in researching this and using this spreadsheet for yourself, you can pick it up on my Patreon. Again, it'll be in the description below, a link to it. $13 a month. There's a chat over there. You can ask me any kinds of questions. If you want to do a one-on-one, you want say a personal walkthrough, a tour of the CoveredCall ETF AllStar Tracker, how to use it, again, in the description below or the first comment that you see. And that is with the intention that, you know, this over the long run has the chance to save you money and level up your education. So get you to where you want to be a little bit faster education-wise, save you money in the long run as well. So with that being said, hit all the buttons of the like and subscribe variety, and I will see you all in the next video.